Hello, thank you for joining today's webinar. My name is Sharon from Premia TNC Taiwan. Premia TNC is an accounting firm located in Hong Kong, Singapore, Taiwan, Malaysia, Vietnam, Korea, China, Dubai, India, and Indonesia. We provide the incorporate service as well as bookkeeping, tax filing, payroll, and audit service. Over the next 20 minutes, we will provide an overview of the local reporting requirements, including local tax filing, tax compliance for companies and individuals. Regulatory filings. Currently, there are 4 regulatory filings in Taiwan, which is summarized in the table. Next, we would like to introduce the corporate income tax. As mentioned before, for corporate registered in Taiwan, its income tax will levy on its total onshore and offshore income. You may ask, what if offshore income already being subject to income tax in other countries? The answer is that you can claim the foreign tax credit against the Taiwan income tax payable, with the limitation that tax credit cannot exceed the tax amount if Taiwan income tax applied. The below table shows the tax rate applied for Taiwan entity. The corporate income tax return for the year ending on December 31st is due on May 31st of following year, and the provision income tax return is due on September 30th. About the loss carry forward, corporate loss can be carried forward against the future profit for 10 years. Audit requirements for income tax return. There are several criteria listed below. Value-added tax. Taiwan is using VAT system, which is similar to European countries. The VAT is levied on the sales of goods at each stage of supply chain. Now let's move on to individual taxation section. To determine the individual income tax, we need to firstly identify the resident status in Taiwan. The resident status is basically decided by the days stayed in Taiwan. In the table, we can find that there are 3 categories. Taiwan provides the tax exemption for taxpayers, spouse, and dependents. The amount fixed at 97,000 Taiwan dollars for age under 70. For age over 70, the exemption amount will be 145.5 thousand per person. Here we can see 2 types of deductions in the table, standard deduction and itemized deductions. The taxpayer can choose only one of them for tax filing. Here we provide the comparison to tax calculations. One is assume that the taxpayer calculates the taxable income based on standard deduction, and the other one is based on itemized deduction. As mentioned earlier, Taiwan residents are subject to progressive income tax rate ranging from 5% to 40%. In the section above, you can see the formula for calculating income tax payable. Thank you once again, and we look forward to seeing you soon. Goodbye.